Okay, we are live on YouTube. Okay, let's go Instagram. There we go. We got Instagram now. Okay. So today's topic here with Josh Brown. No, I'm just kidding. Josh Brown's famous now, we know. So mortgage dad Josh, and we're gonna talk macro. And does the economy need rate cuts? Okay, we got Instagram going. There we go. What up, Ronnie? I see you on there. Um, I'm going to throw on the tickers. All the topics will be on the bottom. There we go. Housing market, recession, inflation, rate cuts, job market, stock market, Trump for crypto, income tax cut. That's something we talk about. All right, Josh, let's talk about this petrodollar. Break it down for us.
Yeah, I mean, there's a lot of different opinions on it, but I mean, in the grand scheme of things, Saudi Arabia didn't re-sign the contract to agree to sell petro using the U.S. dollar. Considering Saudi Arabia is one of our largest producers and one of our closest allies in the Middle East, it's kind of big news. What it means for the U.S. dollar and oil costs, nobody knows yet because Saudi Arabia hasn't come forward and said that this is what they're going to do. But I mean, that's one of the biggest reasons why the U.S. dollar has been so strong and been able to, deal with the fact that it's not even. I mean, it's a fiat currency and it's just the paper it's written on. Has been because of the strength of it with the petrodollar and negotiating powers and using it and having countries use the dollar to purchase petrol. So I mean, it could have a huge impact on oil and the economy.
Yeah, for sure. I think it's a gimmick. I think Saudi's trying to negotiate to get maybe better weapons, better technology, better AI. Who knows?
Yeah, I mean, you got to think about it, right? They're a close ally of ours, so this probably isn't some sort of we're slashing it and we're getting rid of it completely. Maybe it's just a negotiating tool, but like I said, they haven't announced what their plan is, and in regards to that. So I imagine there's a lot of negotiations going on between the U.S. and Saudi Arabia right now to figure out what they want us to bring to the table to be able to do it, and hopefully this administration can negotiate something because I mean that's like I said, that's been one of the driving factors for the U.S. dollar in the last 50 years because that's how
Right.
long this contract's been in place.
Since what? Was it the 50s, 70s?
Yeah, this contract was since 1974.
74. So just around the time we got everything really blew up in the US. Nick was that who
There's,
was that? Nixon? Nixon?
yeah, I mean there's a huge reason why. I mean, you can't downplay the impact the petrodollar has had for the United States over the last 50 years.
Right. Um
What are your thoughts? I mean, what do you think? I mean, knowing what you know, right? They're not currently willing to re-sign the contract for the petrodollar. What impact do you see that having on if they choose not to and there's no negotiations and they move away from it? I mean, heaven forbid they move over to the BRICS. I
yeah.
mean, that's the only alternative because Saudi Arabia doesn't have the currency nor the power to control the price on their currency.
Now, I'm no geopolitical expert, I'll tell you that. And I am biased, so I'm always like, well, somehow the market, the stock market's going higher somehow. So my thoughts are just I wonder first I think it's a negotiation tactic, number 1. Number 2, there's a lot of new how do I say it? A lot of new infrastructure going into for financial infrastructure going into the global financial system to make sure that debt doesn't blow up over this next cycle because rates are the highest they've been in 50 years. So I think there's a lot of negotiations and okay, what do we get out of this if we re-sign? Is it going to be a digital dollar? Is it going to be a basket of currencies? Are we able to trade with other countries if you do XYZ? Um, and maybe they don't like the Biden administration. I'm not sure. I have no clue. But that's my question. Well, I wonder if they wait until the election to see, what they could get from the next administration. And I don't know. I think it's also different because the US is the biggest supplier of oil nowadays. So maybe the US is kind of like, look, we don't really need you to resign. So I really don't know. I really don't know, but I do have confidence it won't be a crisis. If anything, I just think it causes some short-term issues with maybe, I don't know, power trade global trade for a little bit.
Yeah.
Unless China steps in. If China steps in, and I don't think Russia's a real power, but if China steps in or India, and there's some type of let's reestablish a different currency with the same amount of power or whatever and sell. I don't know. I have no clue, but
Yeah, I mean, China's not going to be able to really do that because their currency just doesn't have the same power. There's just not
right.
anything that they could do. They're already in financial trouble as it is. They
Mhm.
don't have the extra money. They need the trade. I mean, that's why you see Xi Jinping being pretty docile towards the United States when it comes to politics right now, because they understand that they need us as their trading partner more than they need to take over the world. So I mean, I think that's a big thing there. And that to your point about the digital currency, I mean, what are your takes on the Supreme Court and their ruling that the Fed can't create a digital currency?
You know what? To be honest with you, I don't think any of them know what that even means. I
Well,
think,
I know for a fact
yeah,
they don't. I mean, that's that
yeah,
none of them probably understand what digital currency is,
yeah,
but I mean, the ruling itself dealt with the CBDC that the Fed had said that they were working on, right?
right,
And it simply states they're not allowed to create a central bank digital currency as their primary source of currency moving forward. So I mean, they're holding their hands and they're handcuffing them, saying, "Look, you can't go and just create this digital currency and flip us from the fiat to a digital currency arbitrarily. There's going to have to be some sort of talks and negotiations, and there's going to have to be some legislation." They're basically putting a halt to the Fed running roughshod on the U.S. as far as a digital currency.
right. So this is where I think crypto does come in. We talk about Chainlink, about creating a global standard for transactions, and the good thing about Chainlink or just the technology, the blockchain technology, is that you can have something because the positive part of the central bank digital currency, things are quicker, they're more efficient. Um, you don't have to wait for your tax to come. It's instant. Everything is instant, but you give up privacy, right? You give up privacy. So I think this is where blockchain might come in because right now, oh man, we haven't even talked about the Chainlink stuff. They're talking to Congress right now. And this goes down a rabbit hole, but I think the Supreme Court wants some guidelines,
Yeah, yeah,
some
yeah. No, I think
guardrails,
that's
right?
exactly what it is.
Yeah, they want some guardrails. And the cool thing about crypto is that it does provide the same efficiencies where the Fed could tap into keep their central bank digital currency, but it must go through the rails of crypto where your data
A
isn't given
blockchain.
up.
Yeah.
Yes, a blockchain. Your data isn't given up and you're still able to verify everything because that's the big thing. Everybody wants a more efficient system. They just don't want to give up their data. And everybody, my grandfather, he's 80 years old and he's worried about, Joe Biden seeing that he bought chicken. I'm like, come on, that's your
Yeah,
biggest,
yeah, yeah.
but they're
Yeah.
still concerned. They're very concerned about their privacy, even though it's irrelevant. It's like you give up Apple, your location
Bro, I mean,
24/7.
you got an Alexa in your house or you use an iPhone, they know where you are 90% of the time, and they know
90%
what
of the
you're
time.
saying, and they know what you're looking at, they know what you're shopping for. All that stuff's already there.
Right.
But yeah, they don't understand that just because you input your information on a website or into a blockchain, it doesn't necessarily mean that that's any different than you talking in front of your Alexa or talking on your phone or using your phone with the location services on.
Josh, the other day I was literally deciding, should I put this honey in my oatmeal or should I put this honey in my oatmeal?
Yep.
Nobody's in the house. It's just
Yep.
me.
Yep.
And all of a sudden I'm getting ads on the best honey and I didn't even
That's
speak
honey.
a word.
Yep.
So that camera is on. I'm like, dude, there's no way they can hear my thoughts. There's no way.
No, they're not. I mean, they're not. Well, I mean, there's rumors that there's technology for it, and
Yeah.
Apple applied for the patent to retrofit AirPods to tap into our brain waves and read our mind. But I mean, that stuff's not there. But yeah, I mean, just a matter of what you're looking at, what's in your home, what you've been
Right.
doing. They're
If
they're they're seeing that. I mean, the cameras are on.
the camera is probably picking up the data, sending it to every Instagram, every network I have on my phone, giving them the data. So yeah, we need some type of guardrail. So I think that's where crypto comes in.
I
You know,
totally agree. I think the Supreme Court's decision and the ruling was more so just to prevent the Fed from running roughshod on some sort of central bank digital currency where they control all the data. They get all, you lose all your privacy. Because I mean, like you said, that's the biggest fear for everybody is okay, well, if we go to crypto and we use blockchain, who's controlling it? And if it's the federal government, then they're not using the same safeguards that a regular blockchain would use, which is your information is secure. It's not being shared with anybody. It's just a ledger trying to document the transaction itself. And that's what I think people want from blockchain
right.
and crypto. They don't want the federal government having all of that control and being able to see what we're doing at all times. They want some of those, some of those guardrails that are already in place in blockchain.
100%. And I think the American people are definitely more aware of this now.
Yeah.
Ever since the pandemic, everybody's aware of finance and privacy and data. So I think we're going to get somewhere as long as, of course, it's always, do we get the right administration? It seems like Trump now is a lot more pro crypto, obviously. I mean, we do know he's trying to get votes. Like we've said before,
Yeah.
this is political stimulus. They're trying to
Yep.
get your vote. They want,
Yeah.
either way, hey, you can have my vote if you're going to pump
Right.
Bitcoin and crypto, right? But yeah, at the end of the day, right now, what we have going on is Congress, or I'm sorry, some of these institutions are actually speaking with Congress and telling them, hey, look, blockchain is working for BlackRock. I know people don't like BlackRock. They're like, oh my God, BlackRock owns everything. But it's like, look, they always have. Okay. Your deal is you need to make the right
Hey, and
financial
it's your
choices.
money.
It's your it's your
It's your
money. Yeah.
money that they use to buy and own all of this stuff. So I
Yes.
mean, that's the sad truth of it all.
It's a sad truth. So they are talking with Congress, and I think we're just getting closer to an AI, a chat GBT moment for blockchain. And it's not Bitcoin. Bitcoin is just a rock. It's just a rock that goes up in value because
Yeah.
it's security, but it's not the smart thing that kind of goes throughout the whole system. It's not the new Google of data, right? That's going to come with Ethereum and Chainlink and some of these other protocols. So I'm optimistic about that.
Yeah.
Now Trump. We do have on here Trump for crypto. What do you think about that, man? Trump, all of a sudden, he went from I would never use Bitcoin. Bitcoin is bad for the country, and the next, he's selling NFTs. Trump NFTs, and next, he's pro crypto. What are your thoughts on that?
I mean, you just hit the nail on the head. It's expanding his base of supporters. He knows that he has his right wing, diehard fans who are going to vote for him regardless. And he had that in 2020 and he had it in 2016. It wasn't enough in 2020. So he's got to find a way to expand his base. So I think you also hit it on the head when we were off air and you were talking about how he's been talking with Vivek. And Vivek is like, look, bro, if you want to expand your base, you need to deal with some issues that maybe aren't being talked about the other side by the other side and pull that base in because there are plenty of people who believe in crypto, who believe in its success and how it will lead us into a little bit better of a financial situation. So let's talk about it. And he probably educated him on the crypto side of things, kind of what it means, what it is, and again the theory behind it, which is no, we're not talking about Bitcoin being the central currency for the United States. We're talking about some sort of crypto, but more importantly, the blockchain giving us the ability to make transactions happen faster. So when you're doing your business deals, you're not waiting 48 hours for the wire to go through because you had to go into the bank and sit there and give them your information and request a wire. These kinds of things make transactions move faster, which brings the cost down. So it's a win-win for everybody. But obviously, we need to have some sort of checks and balances to make sure that the federal government who's issuing the digital currency isn't, monitoring everybody's transactions with it.
Right, 100%. Yeah, as long
I
as
think
we
he gets
have.
it.
Mm-hmm. Yeah, I don't know if he gets it, but he gets it. He.
Yeah. But I mean, you just look at it the other side of it, right? So you have the student loan debt relief, right? That's a huge topic, and it's a huge win for the Biden administration being able to I shouldn't say cancel, not cancel debt, but eliminate debt from certain borrowers, passing that burden on to taxpayer dollars because that money has to be paid for somehow. Where's the money going to come from? It's going to come from the federal government, whether they're printing money or they're using our taxpayer dollars to pay it. Either way, the U.S. consumer is going to be paying for that student debt relief, and so he's won a lot of a base just on that fact. And I think the biggest issue, and I was listening to somebody the other day, that's great, and I think it should be done. But before you do that, you need to figure out how to fix the system, because the system is rigged. Because you're just feeding the system more money, and they'll keep charging more and making more money. So where does it stop, and how do we fix that problem, which is the cost of higher education, the degrees and what you're actually getting with that cost, and then the interest that they're charging. So I mean, the federal government's making it more lucrative for all of those student loan companies to continue to issue student loans to people who may not be able to afford or pay it back. Because what happens at the end of the day, the federal government's going to pay it off for them anyways. Does that really work? I mean,
No.
is that not just already universal education for everybody? So everybody should go to college, everybody should get a degree, and the federal government will pay for it. So you don't need student loans. We'll just foot the bill with the federal government. Because I mean, that's basically what this is doing for
Right.
those people. And if you truly want to make this more affordable and you want to make education for everybody, more attainable, then the federal government should pay for everything, right?
Right.
Shouldn't
And
even have student loans.
a lot of those jobs are, government jobs anyway, and it's just a waste of, you're not producing anything. You're just another glorified snitch.
Yeah, I mean, I thought it was something pretty disgusting. There was a video on social media where they were interviewing graduates from a New York college,
Mhm.
and the degrees, like the actual focus of their education, higher education, was disgustingly irrelevant to everything. I mean, to literally everything. These children went to a 4-year college, paid $100,000, maybe more, and they have a degree in something that will not get them won't make them a somebody in the actual economy that will provide something of service for everybody else. Not worth a penny.
I saw that's like master's degree for art.
Yeah, well, it wasn't even art, bro. It was like for human caring, or you know diversity, inclusion, and it was just some crazy stuff. And I was just like, oh wow.
How to paint on the side of a building where it's not racist. How to
Yeah,
make sure
yeah,
that paintings are not racist when you paint them. Yeah, it's
yeah,
ridiculous. I saw that. I saw that
yeah. I
little clip. It's ridiculous, and they're proud, and there's a certain demographic that they preach to, and unfortunately, they buy into it. And they're not going to get paid. They're not going to get paid. They're going to have to pivot and go somewhere else. So,
they're gonna have to work fast food or in the services industry. I mean, it doesn't do anything for this economy, really,
right.
because
And
they're also not going to take the jobs that we actually need people working in. I mean, there was something that I read recently. Santa Barbara is struggling with artichoke farmers because they don't have enough people to work the farms, because the migrants don't want to work them, and obviously everybody else in the United States thinks they're too good for them. So I mean, where do we find the fine line? And we're creating, or we're bringing up people who know how to do the jobs that we need them to do to be able to provide for the United States.
yeah, we do have a productivity issue. Higher skilled, uh,
I
higher
mean,
skilled
even lower
labor.
skilled,
Yeah, lower skill. You
lower
think it's
skilled
that
labor
bad,
and high
lower
skilled
skill?
labor.
Because
Yeah,
I think if we, having the borders open, obviously it's a political issue, but it's like a lot of them are taking the lower skilled jobs
you're going to
and
see a lot of construction and a lot of farm. But I
mhm,
mean, that's an example of currently in Santa
right.
Barbara, California, where they cannot find enough workers to work the artichoke farms because there's a lack of labor for them in that position.
Well, too, wouldn't it be like Santa Barbara? Like, well, probably they can't find workers because where are they gonna live? It's too expensive, right? And that brings
That's
us
another
to,
problem, right? Housing.
yeah, housing. That brings us to housing. And as a matter of fact, what is the housing market looking like right now?
All right. So we talked about it, like, I think every time, right? So we are starting to see inventory rise, which is good. But the numbers, as far as the amount of inventory we have, is still historically anemic. We're not seeing just a flood of homes being listed. Um, So we've seen an increase in inventory, so a slight increase in supply, not enough to bring prices down, not enough to change the real estate market. We've seen demand kind of slow down as well, which is odd because during the summer months, usually you see more homes being sold because there's more buyers out shopping during the summer months versus the winter months. Um, so you're seeing homes sitting on the market a little bit longer. You're seeing homes come off the market because that's the point that I think a lot of people misunderstand when it comes to housing and inventory. If the person doesn't have to sell and they can't get the money that they're going to get for selling the house, they may just take it off the market. And there's plenty of people that are talking about how they listed their house thinking they were going to get, X number of dollars. They couldn't get any bites on it, so they just withdrew the home from the market and they're back to living in it and they're not gonna, trade up or trade down. So I think um, there's a lot of misinformation right now about delinquency rates in single family homes. We did see an uptick in multifamily delinquencies. Some Freddie Mac data said that multifamily delinquencies are up to 0.44%, which is as much as it was in 2011, which somebody was trying to use as fear mongering, saying multifamily delinquencies are on the rise and they're going to crash the market. We're talking 0.44%, not a huge deal. It's compared to 2011. It's what it was then.
And a lot of that is probably what New York,
Yeah,
San
what you're looking at
Francisco.
you're looking at multifamilies where the landlords haven't been able to raise rents and may not be able to afford the mortgage because they lost a tenant. And so without raising rents, they can't afford the mortgage, so they're not making the payment. But again, it's a small number, and yeah, it has to do with rents. So we're seeing rent flatline and in some cases come down. There are some local markets that are seeing an influx of inventory that is causing prices to start to come down a little bit. So there's some places in Florida and Texas where builders were overbuilding. They were building so many homes they couldn't, and they didn't put the brakes on fast enough. So they're starting to have to bring their prices down to sell their homes for a little bit less. But for the most part, nationally, home prices have gone up year over year. So the last data showed that they went up. Home prices went up year over year. They're still continuing to go up. Dealing with the consumers that I deal with on a daily basis, we've seen more people jumping back into the market to buy a house. So we're seeing more of that. But again, without a bunch of inventory, we're not going to see home prices come down any. And foreclosures aren't on the rise in the sense that they're reaching numbers like they did prior to 2008. They're still at historic lows. I mean, well below anything else in the past. I think the biggest real estate issue is commercial real estate. Still a problem. Tons of buildings left empty because people aren't coming back into the office. They're working from home. And then again, we're talking about AI changing the way things are going. You're seeing them being able to do some of the work for some of their jobs through AI and laying people off. That's why we've seen jobless numbers go up. We've seen the unemployment rate go up. These are all things that are kind of playing into that right now.
Okay. So do you think, I mean, when I look at jobless numbers, I think it's more like rolling recession as before. I
Mm-hmm.
think it's more rolling,
Yeah.
right? I don't know which places in the country are suffering the most. My guess is it's mostly, I want to say Democrat liberal cities, right? I want to say, I mean, because I think of San Francisco, I think of New York, where people cannot afford to live there. And a lot of the commercial real estate, people are leaving. Why? Because crime is rising. So here in Phoenix, I don't think it's bad. Phoenix looks pretty good. There's prices are coming down for rent at least.
Yep.
Um, but maybe in those areas, that's where the unemployment is starting to rise a little bit. I don't think it gets tremendous. I don't think it goes into any kind of, I mean, we're still below 2023 last summer levels. I think we're heading towards the last summer levels right now. So we're not there yet. Also, there's a lot of new jobs that are popping up. The question is, are people going to take those jobs and are they going to just sit at home? Who knows? If they're hoping for the government to pay for them, maybe they don't. So I think it's just kind of a sloppy. It's almost like the job market is kind of like the housing market. It's kind of frozen. There's jobs out there, but people aren't really moving because they can't afford a home. They can't really afford to move to get those jobs because of houses. So what is the answer here? Is it rate cuts? And if it is rate cuts, and here's the issue. I know I'm jumping all over the place,
Ah, it's all
but
good, man.
a lot of people really believe that rate cuts are going, I see this fear mongering too. If the Fed cuts rates, housing prices are going to soar to, they're going to get too expensive. But if they don't, they're going to crash to all-time lows. It's like either way, they're pessimistic on either side. And my guess
Yeah,
is from your perspective, we're still in the slump. We're just waiting. We're just patient, right?
I say be patient. I mean, here's the deal, and I think it's funny because a lot of people assume that when rates come down, prices go up. But if you look historically, go ahead and I mean, if you were to check to see what housing prices did as rates were cut and vice versa, it's not. There's no correlation. If they cut rates, that typically means that the economy is doing poorly. If the economy is doing poorly, and it's doing poorly enough that they have to cut rates, especially if it's a tough rate cut, you're looking at people losing jobs. People losing jobs lose homes. Lose homes, more inventory. Home prices actually come down. Yes, cutting rates will make the exacerbated home prices more affordable, but there's no correlation between dropping rates and raising prices because at the end of the day, you have to have a consumer or an end customer who can afford that home. And if a person doesn't have a job, they can't afford a home. So if they're cutting rates, it typically means we're seeing unemployment rise, people losing jobs, a bad economy. That means that we could see, people starting to lose homes. So more homes on the market, less people be able to afford them. Still, even with lower rates.
Right. So then rate cuts, because this is my theory too, is that rate cuts are actually going to help the housing market to some degree and slow down inflation. That sounds so counterintuitive, but there's a theory out here kind of moving from housing, baby boomers own a lot of the housing. There's a theory that, well, the baby boomers own most of the wealth. So they're getting 5% on their houses are what three, most of them are paid off, but they're paying,
Three.
let's say they're paying 3.35, right? They're
Mm-hmm.
getting 5% on their cash. So they just keep spending. They're going on flights, they're doing experiences, they're spending on services. Therefore, if you cut rates, they're going to see, okay, I'm not getting as much, so I have to cut back on my spending a little bit. They're not going to calculate it out and say, well, I can take only 2 more trips to the bar this week, right? They're probably going to just say, okay, let me cut out $500 a week or 1,000. Let's not make those trips. So I think that if they're and also the crazy thing is people think rate cuts mean the Fed goes to zero. It's like, bro, they have so many cuts to do. They cut by 25 basis points on average each time. So we're at
Yeah.
5.5,
Yeah.
5.25, 5. That's 2, 4.75, 4.5. They can do 5 rate cuts and still be at 4%.
They're going to be somewhere in the threes. I mean, when they start doing rate cuts, their target will be somewhere in the threes because they won't want to have to go to zero. Because if they have to go to zero, that means we're in a lot of trouble economically.
Right, right. Yeah, we're in a lot of trouble. So I think we should cheer on rate cuts at this point. And not so much because we need rate cuts for, people to get housing. Cause I also know people who are like, oh, but if my house goes down in value, I'm screwed. And I'm like, well, it's not going to drop to zero. It's probably just going to slow down in how much it's picking up. Like inflation isn't prices. Oh my gosh, people get this. They still don't get it. I tell my mom this every time she visits and she still doesn't understand. I'm like, look, inflation is coming down. It is slowing, but it is not prices, mom. It is not prices that are coming down. It is the rate at which the price goes up. If you paid for lunch and it was $10, and then the next month it's $11, and then the next month that's a whole dollar it went up. But if the next month it only goes up by 10 cents, it still went up in price. But
But
it
it's
only went up,
slowly when
but you
going up.
didn't notice that 10 cents. You didn't even notice it. Well, knowing my mom, she did. She looked at the receipt and she was like 10 cents. But then I also say, hey, but your housing, the cost of your house went up too, right? And your
Yeah.
wages are up. Didn't you get paid more from, a year ago? So I think a lot of times people just look at the worst case scenario with their money and they're like, well, I'm paying more, but it's like, yeah, but you're also, if you
Making
do own a
more.
house,
Yeah.
your house went up. So the rate cut overall, is it best for the economy? What's more important, higher, prices are coming down, but what's more important, having a job, people having jobs? Because if they don't have, if we don't make the rate cut and we lose jobs, where does that money come from to help with unemployment? It comes from your taxes anyway.
Which will increase inflation because the government's got to spend more money to pay those. Yeah.
Exactly.
No.
So the key here has to be, how do we create more productivity? And my guess is, well, if Biden was going to create regulation for more small businesses, he would have done it already, right? And I don't think we really see that. So Trump's more of a businessman. He's going to have to create more jobs, and not just create jobs for AI, but create more jobs where people are producing something meaningful.
Yeah.
Not going to, and I don't mean meaningful as in I'm a social worker working for anti-racist, anti this, blah blah blah. No, we're talking about producing some kind of goods or services that people need on an everyday basis. They don't really want to hear about your political views. They want to hear, are my prices lower to get my haircut? I mean, I'm paying $50 to get a haircut. Are you kidding me? More than that too with the tip. And so we're going to need more. We're going to need more production at the end of the day. So rate cuts I think they're going to be positive. I just think,
Oh yeah.
The biggest issue is, like we talked about, the petrodollar. Are we going to get a spike in oil? So far, we've seen everything that has everything. Well, I don't want to say everything. It's only been a couple months. So far, the economy slowed for a couple months, and we've seen everything that leads to a recession except for the spike in oil. And that's what I'm watching. Are we going to get that big spike? Now, it did come down. We got down to like 71, dollars a barrel the other day. And I was like, oh, stock market's going way higher because now it's expecting less inflation on the energy side. Boom. Now we're back up to 80. So I'm like, damn, what's going, what are we going to do here? Right. So I think we are making a deal with Saudi Arabia. Let's say we make that deal. They pump out a little more cuts. I know there's a meeting, OPEC meeting last month, and they actually said, hey, and they're playing games. They're not going to tell us what they're really going to do, but they're saying we might actually, increase production if XYZ. So if that is the case, we should be good. The only problem is we're heading into the election, and this is where we have no clue what's going to happen. There's only one thing that is promised, in my view. The economy is not promised. What is promised is that the stock market will get promises, because the biggest
they've already started
corporations,
making the promises.
they've already made the promises. They continue to make them. Why? Because most of their contributions are going to come from the big corporations, from the billionaires. So
Yeah.
they,
Deals
they're
are being
going to,
hashed out.
there you go. They're going to want that.
Yeah.
So
So I was actually I wanted to ask you, because we've talked about it in the past. The CHIPS Act, the infrastructure bills that kind of the administration has put together. Had you heard about the high-speed internet one, and the fact that it hasn't laid a single line since they forked over that money?
No, I haven't. What I have seen is that there have been lower bills, as far as I know.
So from what I understand,
Mhm.
not a single line has been laid for the high-speed internet as far as that infrastructure is concerned, because the Congress and the government, the legislative branch
Mhm.
is holding it up because they don't have enough DEI. They're not including enough of the people that need to be able to get the jobs. So they're making it government jobs to do the new high-speed internet, where they could hire a private company to do it for far less. So they're going to do it as a government job. And because the government can't find the correct type of workers to do it, they're not allowing it to go through. So not a single line for the high-speed internet has been laid, even though we've foot the bill and already paid a check for it. Nothing's been done on it.
Wow, I did not know that. And this is why we need Elon. This is this is
Well, yeah,
why
he said, he's like, let me do Starlink. And
Yeah.
so they won't let him do that. So now he's providing internet to some, tribe in Africa who now has high-speed internet, and where, some of our rural areas in the United States can't get it.
Right. Right. Yeah, the fiscal stuff is a mess. It's a complete mess. And I think maybe voters are going to vote this. I mean, hopefully they vote not something stupid. Hopefully they understand, look, the economy is the crux of everything. It doesn't matter. We need a smoother economy. We need all this political gridlock might help the stock market, but people can't even invest, right? People can't even invest because they're not making anything. Education, as far as education, it's like, what are they being educated on? When are we going to make these changes? So that's unfortunate, but we definitely do need more. I know people hate like corporations, but corporations are also synonymous with small businesses. Also, a lot of small businesses get bought out by corporations.
Yeah.
So we need more of them to step in, because they're there for profit. How do they get profit? They have lower prices and better products. So we need better capitalism at the end of the day. And right now it's mostly governmentism. It's just governmentism, right? More jobs for the government. Nobody, people don't want to work for the government unless they are, have no outlook for themselves. I don't really know a lot of people who just want to work for the government. Of course, if you're coming out of college, like, hey, I'm gonna get paid 80,000 to do nothing. Okay, great. But after a while, you realize, okay, well, I can't do this, I can't do that, and I've built nothing for myself. I'm working for the government, right? And then XYZ. So we definitely need that to work out. The income tax cut. Let's talk about that real quick. Trump is now promising to eliminate income tax. What
Well,
is the
he's talked about eliminating income tax and going back to the pre 1930 style of government income, right? So tariffs.
how does that work? I actually don't. In theory, I think what does he do? He just increases basically exports. He increases exports.
So ideally, what he does is he eliminates the income tax, which raises everybody's disposable income at home, and then increases tariffs, taxes on imports coming into the United States or taxes on exports going to other countries to raise revenue for the United States, while also that raises the prices of those goods. So hopefully, what he's shooting for is that the tariffs don't increase the prices so much that the new disposable additional income isn't enough to pay for it, or more than enough to pay for it, right? So effectively, a wash or better for the U.S. consumer really depends on the tariffs and the countries and the businesses that are dictating what the prices are and how that affects them. But and then doing things like taxes on gas, cigarettes, alcohol, different luxury items, the sales type things that they can tax that not everybody has to have, right? So you're not going to go tax eggs because you don't want to drive up the cost of someone's simple ability to survive and live, but luxury items, things that boats, those types of things. So start changing the way he's taxing things, more of a sales tax on big items that people don't have to survive, and then tariffs. So basically all of the revenue coming from those types of taxes and tariffs versus income tax.
That sounds pretty good, because it's almost like, okay, well, we're gonna tax the rich, but we're not gonna take it out of their paycheck. We're gonna take it out of their discretionary spending.
I mean, that's the theory behind it, and that's
Yeah,
for people who are proponents of this. It's one of the shouting boards for them, like because people will say, "Hey, make the rich pay their fair share taxes." Okay, great. Here's a simple way to do it. The rich like to buy yachts and planes and big ticket items that the average day American can't afford or won't pay for. Now let's tax those at a higher rate. So when they're purchasing those, we're actually getting some of that revenue so that we can offset that by not taxing you on your income.
okay, yeah, that makes sense.
But I mean, there's a lot of different things that it can be manipulated. It can be there's just like anything that's a tax. There's things that will make it effective and make it ineffective.
Yeah, because we have,
Um,
like, 100,000 different items. So which ones do you choose? Which ones do you don't choose? And then if other countries, how are they going to respond to
Tariffs.
being tariffed? What if they mess us up? We're gonna have to be the biggest producer at the end of the day. We're gonna have to produce
Exactly.
everything for ourselves.
And
I
that's
guess.
the other part about it is that that should entice the U.S. economy to be more of a producer. I mean, that's
Right.
another proponent of this type of tax is it's going to encourage U.S. companies who are producing or selling goods from United States companies that want to sell goods, whether in the United States or outside, to produce more of what they're actually selling instead of outsourcing it to other companies or other countries, bringing in more jobs, bringing in more production. So, again, you get the argument. Well, the cost to produce in the United States is much higher than in Mexico or China. Yes, because the cost of labor is higher. But if
Right.
you were to create so many jobs that people couldn't require that high a pay and they just filled them and people could, it would, again, supply and demand. You increase the supply of jobs, you decrease the income that can be received for those jobs because there's just that many jobs required. So there's more people applying for them. Again, there's how does it work? How far does it go? How much do you need to get this to get the cost down? But that's the theory behind it.
Right. It always comes down to the individual. What are you gonna do if you're laid back and not doing your research? Nothing changes for you, because now you're not getting as high of an income as you could. and you're not figuring out the tax loopholes, you're not figuring out the best job for yourself, you're not investing, you're not doing this. So it gives opportunity for sure, but it doesn't promise anything. It doesn't promise you
And
anything.
that's the part that you
Yeah,
have to worry about, right? How
right.
much of the US population is willing to have that drive? That's what the US economy was built on, was, ingenuity and people pushing themselves beyond their limits to better themselves and make as much money as possible. So do we still have that mentality in a majority of the US population, or do we have people who are arguing for universal pay?
Right.
Do do we do away with all of the fast food workers' jobs because we now automate and use AI for everything, therefore eliminating all of those jobs, and now those people are out of work. And instead of encouraging them to move on to a different job, get a new skill, do something else, we say, you know what, you're right. You don't have to work because you can't get a job because you lack the skills. So instead of training you and giving you those skills, we'll just give you a universal paycheck.
I also see there's a lot of push to just for companies, the top S&P 500 companies say, look, we don't even want a college degree anymore. It's a waste of time. Let's just do
Yeah.
trade schools and get you
Hmm.
straight in. Like if you're 16 years old, let's get you trained already. It's kind of a lot of high school is a waste of time unless you're going to work for like to be a doctor or some kind of super specific knowledge. It's a waste of time. So let's just
Yeah.
get you making money today.
Yeah.
And
Let's privatize education and give the companies the ability to control what the kids are learning so that they're getting the skilled labor from an early age all the way on so that they've trained workers to do skills and jobs that are high paying jobs.
they get a piece. They get some ownership, right? And that's the big thing is equity. Nobody
Hmm.
gets wealth without having some type of equity at the end of the day. So
Yeah.
that
Ownership in
would
the
be
company that they're producing for.
right, exactly. So they're kind of committed to it. They're not going to switch around unless it benefits them. They don't just have to get fired. So that would be a lot better for sure. We need better regulation, 100%. Um, and yeah, I guess we just have to get through the next 6 months. Well, we don't November. We don't really
You
have.
don't know if it's 6 months or 4 years and 6 months.
Oh my goodness, that's true. Now recession. All right, yeah, recession. Oh no, rate
Okay.
cuts. Real quick, when do you think is the first rate cut?
They'll if they're going to do one, they'll do one at the end of the year.
You think they'll wait? You think that's not too political because you think
No.
I'm hearing.
I think I think he's already been called a puppet of the Biden administration one too many times, and he
Mhm.
wants his legacy to be that he was bigger than any administration. So I think he is going to hold off on a rate cut until after the election to prove that he is not beholden to anybody and that the Fed makes all decisions outside of anything political. They are apolitical, and we are not going to bend the knee to any administration or any political pressure. And I think that's because again, there's been interviews with him, and he's got this ego that he wants to be remembered as the Fed chair that championed its apoliticalness and its ability to control markets and give the best economy to the people. And I think that's what his goal is. And so I don't think he does a rate cut before the election because I don't think he wants to be viewed as beholden to the Biden administration.
Or he does. Yeah, okay, I see that. I'm hearing so many different ways to think about it. Like,
Oh yeah,
if
because everybody has their opinion, bro.
yeah, everybody has their opinion. If he waits to the end of the year, it would be political, some people say, because it's going to look like, okay, if Biden or if Trump's elected, it's going to look like he was waiting for Trump, but he can't predict that, right?
No,
So that does make sense. So that does make sense because then he's waiting till after the election to say, okay, now we're going to cut rates. Let's get this economy going versus we're going to cut in July so that we don't cut during the heat of
the
the moment.
election cycle,
Yeah,
yeah.
we cut
Yeah.
maybe 25 basis points. Here's what I'm hearing: 25 basis point cut in July, and because September would be too close to the election, 25 basis point right cut, and then the next couple meetings, he's like, we're gonna hold right here. We're he gets right back to tough mode. We're gonna hold right here. We're just relieving a little bit of the pressure since inflation's come down. Okay, we're gonna relieve some of that pressure because a lot of people don't realize as inflation comes down, there's actually more pressure. Those rates are actually pressuring the economy even more because the real rate of interest is between inflation and the interest rate. So you're just matching inflation. But that perspective that you lay out actually does make a lot of sense. Let's just wait to the end of the year after the election. Therefore, we didn't cut for Biden and we didn't cut for Trump because we didn't even know who was going to get elected.
Yeah. And I mean, the other part about it is you got to think about it this way. They've been telling everybody that they want inflation to be at an average of 2%. They can't say that it has, and they can't do that yet. So cutting in July with inflation still at 3% goes against what they've told everybody their target is. So I again think that he's going to have to play the game and say, look, we can't cut rates because we don't have inflation near where we want to. I don't think he waits for inflation to get to 2% and stay at 2% for any extended amount of time. I think as soon as it gets close enough to 2%, they can pull the trigger. But until that day, I don't think you're going to see them cutting rates because, again, that would be counter to what they've told everybody that they want.
Unless commercial real estate breaks some of these regional
But see,
banks.
I don't think that it would be a rate cut that they would use in a situation like that. I think that is more QE.
Okay.
I think they use some of the other tools in their belt if something like that happens, because rate cuts don't necessarily help instantly for
They
those
don't. You're
regional
right,
banks,
right,
right?
right.
What they can do is they can come in and they can buy up some of those bad debts that those banks are holding, which frees up some liquidity for them and keeps them in business and them from not crashing. Um, but again, the other part about this is they have to look at it. Eventually they're going to have to cut rates because you've got the U.S. debt, $1 trillion in interest, and then you have what was the number? It was like $256 billion in unrealized losses by most of the banks in the United States because of the
Mhm.
bonds that they hold. Because that was what they were using as their collateral for lending out the money that they did over the last 5 or 6 years,
Right.
and now they're worth far less than what they purchased them for, so they don't have the reserve requirement. So unrealized losses. If they had to sell those bonds today for liquidity, they would actually lose $256 billion. So the Fed's gonna have to cut rates to help with that, with our debt, and you know, another thing that people aren't talking about is the fintech as a service for banks, right? So if you used one of the fintech companies' apps that were offering 5% interest, but they weren't necessarily a bank, right? Because they didn't have a bank. They were partnering with a bank, and you were depositing your money with this fintech company that was then using those deposits. There's, I think, two fintech companies that have frozen all assets, and the FDIC has said that they are not insuring that money, even though the people that deposited with those fintech companies were promised that they were FDIC insured.
Right. I saw that a couple weeks ago where it's kind of there was some influencers, YouTube influencers
It was
who.
like Ada, I think was one of them, and then there was another one that was. But they basically all the assets that people had in those accounts are frozen, and the FDIC has said that they're not going to insure that money.
Right, because it's not necessarily lost, it's just frozen.
Well, but they're saying that even if you lose it, they're not going to insure it because it's not an FDIC insured company
Oh,
that you
okay,
deposited
okay.
your money with. You deposited with a fintech company, they're not
Right, right,
regulated, they're not insured. Yes, they used a bank so it was like a service. The fintech
right.
company was
It's a
a service.
middleware, yeah, the
Yeah,
middleware.
so they'll protect the money that was deposited in the bank, but the fintech company, if they weren't depositing all of that money into that bank that was FDIC insured, that money is not insured by the FDIC
See, this is everything for
and
me just
and not regulated. It was unregulated, and
mhm,
I think that's as far as banking and residential real estate. I think the fintech bubble is where you see a crack
mhm.
in our system because so much of it was unregulated. There's lending that was done that wasn't regulated and didn't really fall in line with the Dodd Frank, and I think those types of loans are going to starting to see some trouble. And I think between commercial real estate and the fintech situation, I see some financial issues in our financial markets.
And that's why everything points to crypto because at the end of the day, a lot of these fintech companies, they just have software engineers. They have code and they can do things that Wells Fargo, well, JP Morgan can probably do it, but they can do things that banks cannot do. So when you apply blockchain to these banks who are FDI insured and the smart contracts are regulated through DTCC, which is the Depository Trust Clearing Corporation, once they get cleared, they can do the same thing as the fintech companies
Yep.
but they're FDIC insured, right? So I still think yeah, I agree with you. I think a lot of these are washouts. Everybody's like, well, what about Square? What about a lot of these fintech companies? And Square, I'm cool with. They have a lot of Bitcoin, but what about these companies that I could invest in? Like, who's another one? SoFi or XYZ. And I'm like, look, I
Mhm.
think honestly, blockchain. eliminates a lot of these companies because they're
Yeah.
doing things that banks cannot. But as soon as they move their assets to the blockchain and they have smart contracts, they can do the same things, if not even faster, better, and settle instantly without going through all these middlewares that are untrustable, that are very small. I mean, these banks have tens of hundreds of billions of assets, and collateral. So they don't, even if they did have an issue, they'd be able to connect to the Fed pretty quickly. So I agree with that. It sounds like more liquidity is coming,
Yeah.
and we're starting to see money supply pick up. I don't know. I mean, as far as the stock market goes, I'm like, here's one of the charts. That was the peak back in January where we peaked out, and we're starting to climb back up again. And that's only a reflection that the Fed has been injecting liquidity back into the market, into the capital market. There's a
Yep.
distinction here between the economic system and the financial system.
Yep.
The course is almost ready. We're going to talk about this in the course, where the economy is much slower. The economy takes a while, right? Those rate cuts don't hit the economy right away. They're going to hit the financial sector first, or the financial system. And that's why assets usually lead a lot quicker than anything in the economy. So that is an interesting game there. Everything comes down to finance. It's really all it's all a pyramid scheme at the end of the day. And it's like, do you have the knowledge to understand where you should or should not be?
Where you
Right?
got to shuffle that money.
Where are you going to shuffle that money? Unfortunately, but yeah, it's always a game here. Now, other central banks, the European Central Bank, the Canadian Central Bank, they're all starting to cut rates now.
Cut
So
rates.
I think, of course, the cut is coming. The question is it at the end of the year? Now I'm going to factor that in. If not, they have to increase liquidity. And if they increase liquidity, well, as in, they start injecting into the banks to help their collateral. That just means assets continue to go higher. People are saying this is a bubble. This is 2000. I don't even think we're in the bubble phase yet. Maybe some small little companies, but the market as a whole, it has some pretty strong dynamics behind it. The fiscal policies, right? Joe Biden is just, here we go, more stimulus here, more stimulus there. Now Trump is ridiculous here. We're going to cut income tax. So that makes the market expect more liquidity in the future. Now he's talking about deregulating these popular assets like crypto, or communities, and making better regulation for them. And that's going to be more stimulus at the end of the day. AI is undeniable. There has to be regulation there, but it's undeniable that it's going to continue to increase productivity. No, you're not going to lose your job. Maybe you do lose your job, but guess what? There's going to be another job, because most companies don't want to actually lower workers. They want to create more stuff. AI allows them to create more stuff, more services, more productivity, and they're going to add you to that. They want to keep you there, but if you're not keeping up, they're just going to switch you out with somebody else, right?
Yeah.
Corporations are not the
Find and
government.
figure out and understand AI. That is
Right.
super key.
Super key. All right. Recession. How would you define a recession? Are we close? Are we there? Are we already here? I think, last year we had talked about this. We thought, okay, if the recession comes, it's going to be what, before like May? We said like May, June, right? Where are you at with recession? Are we in are we heading for a recession? What do you think now?
I still think we are, by definition, in a recession. Strip out all of the government jobs over the last two prints. GDP is negative, two prints in a row, and unemployment isn't rising. And I don't think it's going to, because just look at the numbers as far as the number of people who have left the workforce completely, or who are semi-attached to the workforce. There's just a ton of people who aren't working that just aren't being reported in those numbers. So I think, again, if you look at the GDP numbers, they'd be negative if it wasn't for the government jobs that were created and spent. So I think we're in a recession. We've been in a recession. It's just a matter of the fact that the government's still spending us through one. And ask the everyday Joe, do you feel like this economy is doing well, or we are in a recession? And you will hear they feel like we're in a recession because they can't afford to pay for everything that they need to pay for to be able to live.
But isn't that just inflation more than recession? Because, people hate prices being higher than losing their jobs, right? At the end of the day, like, they feel like they're in a recession for sure, but they continue to still spend.
Yeah, and I think the problem again, and this is my point, right? So what's the definition of a recession? Two negative prints of GDP, right?
It depends who. I mean, the NBR usually classifies it.
what's the original definition of a recession?
I think it's the NBR. As far as like from the market perspective, it's the NBR. They look at unemployment. They look at the job. They really look at payrolls, right? Where
Mhm.
payrolls, and they look at how long it's been. So it's like how long is the duration? And we really haven't had negative job payrolls. Well, I mean, since that we can see, right?
Yeah,
And they also look at how broad it is. Where is there a recession? How broad is the actual recession here?
right. How many of the industries are actually
Right.
showing negative prints versus what's showing positive prints? Again,
Yeah.
I would argue that yes, part of it is inflation they can't afford, but I
Hmm.
also think that there's still a lot of people who are not actually working or unable to work or been laid off. I mean, I just posted a job for an assistant position because my assistant took a job with the California Housing Authority.
Hmm.
We had, I think it was over 1,200 applicants for an assistant position in California. I interviewed 150 of them, and I would say about 50% of them had no history in the mortgage industry and that they had been in other industries where they'd been laid off. And this was
Mm.
just on a LinkedIn post.
But you're in California. Does your hold on? Does your assistant job? Do they have to be out of
No,
California?
they do not have to be in
Oh,
California.
okay, okay,
I let it be remote. So
okay.
actually I hired somebody from Texas.
Okay, well, to your point, Powell actually did low key took a jab at Biden in the
I
last
saw that.
FOMC meeting. He said,
Yep.
I can't quote him word for word, but he basically said these jobs we don't actually see that the jobs we're not seeing the data where the jobs are growing. We don't see that.
Yep.
And of course, I'm cheering on. I'm like, yeah, the market's gonna lower rates. Let's go. But that was interesting because a lot of people try to say, on the political spectrum that Powell is supporting Biden, but he's really not. He's been really neutral. He's been very neutral, and he's saying, "Look, I am not supporting. My job is not to give black people better jobs. That's not my job. My job is to manage the risk of the money supply, manage the risk of the financial sector.
Stabilize inflation and stabilize the jobs market.
Yeah, stabilize the
That
job
is,
market."
yep.
So now I'm with you. I didn't believe you before. No, I'm just kidding. But the payrolls, right? Well, I'm looking from a stock market perspective. The stock
Yeah, yeah,
market
yeah.
really doesn't care. It's like, look, jobs look good, we're going higher. Jobs look bad, we're still going higher. Like
Yeah,
either
see, I
way,
mean, that's the
right?
thing is like the
Yeah.
stock market isn't a good indicator about the economy anymore. I think there's a disconnect, and I think that's a lot of it's being driven by AI and the technology that we've introduced
Well,
because
it's an
we're
indicator of the it's an indicator of
yeah,
technology, right?
exactly.
Not necessarily of the old school economy. What would you say that is? Construction? I mean,
Manufacturing,
manufacturing.
construction, labor, like those types of economies are slowly starting to die here in the United
Right.
States.
Hmm.
Most of our economy is centered around technology, services, and the ability to, innovate,
Right.
use technology to create new types of technology. So I think, yeah, I mean, that's the part about this that I think is different. I don't think the economy is necessarily, or the stock market is looking at the economy, whereas most people look at the stock market for the economy. And really, right now, there's a big disconnect between the two
Right.
because the stock market's rallying regardless of what happens because they're all looking at it from the perspective that they can spin it to positive news and things are still going well.
Right.
But when you look at the actual economy itself, people are out of jobs, people aren't able to find jobs, people aren't able to afford things. We've seen credit card debt rise to its highest level, and people are starting to fall behind on their credit card payments and their car loans. So you see some of the inner markings of a recession in that period in the story because people are running out of the money that they can use to spend to afford to live and to do the things that they're used and accustomed to doing because of the credit cards, car loans starting to go into default. As that starts to trickle down, you'll start to see it. I think though that it doesn't spill over into the housing market because people are looking at their house payment going, I couldn't even rent a house for this much.
Right.
So why would I let my house go? So I will forget everything else. I will make my house payment because I know that I can't afford to move.
Right. So basically if you're a computer engineer, you're not in a recession, you're in expansion. But if you're
Yep.
a nail tech or you do lashes, you're feeling the recession because
Yeah, because
those
people aren't
people
out
are not.
going getting their nails done, getting
Right.
their nails done. Yeah.
Check out this stat for you real quick. So last year, if you take Apple, Amazon, Google, Tesla, Nvidia,
The big
um,
six.
Meta, right? You take all the big hyperscalers, they spent 150 billion on AI last year.
Mhm.
This year, halfway through the year, they've already spent 170 billion. So I think that's why the tech sector, computer engineering, whatever it is, AI, anything related to AI, you're gonna have a job. And
Yeah.
like you said, you must learn this stuff because that's where all the jobs are added. So I think we're in a transition period. Are we in a recession? I'm gonna be biased. I'm gonna say no. I don't think we are. But and also I'm in Phoenix, and Phoenix is growing pretty quickly. There's a lot of immigration. There's a lot of buildings. You see nothing but building here. But I'm sure if you go over to like West Virginia or something, people are struggling. So I think it's also so we're in this transition period, and it does kind of suck because it's just not even. It's just not ever going to be, equal. But the opportunity is if you're kind of older and you don't have skills, you're kind of screwed. If you're younger, you better start learning. You just have to start learning here. That's how I see it.
Start playing with AI.
Yeah, start playing with
just
AI
get
a
on
little bit.
Chat GPT and start learning how to teach it to do things and give it the prompts that are needed, because that's what they're going to be hiring for. People that are able to use AI to get the coding or the information they want out of it.
Right. So yeah, that's kind of what it seems like is going on here. If you're rich, you get richer. If you're broke, you get broker.
Transfer of wealth.
Unless you're in that transition period where you're trying to learn something new. The
Mhm.
old economy does not work anymore.
Yeah.
And
I
a
mean,
lot
don't
of
get me
people,
wrong. I think the U.S. government can do a pretty good job and pivot here as far as if they want to bring some of the labor type jobs and some of the manufacturing type jobs. I mean, bring chips production back to the United States, start mining some of the stuff that we need to mine. I was just watching, there was a news on Bill Gates just started his first nuclear plant in Wyoming. So a $10 billion nuclear plant that he started, he should have it done by 2030. His plan is to build, um, he said tens of thousands of them.
okay. Yep. And
Green
also,
energy, no
you know,
carbon emissions.
I sent you that little clip on the Cybertruck.
Yeah.
That was
I didn't
hilarious.
buy the charger.
He's like, well, I didn't
I
buy
couldn't
the
afford
charger.
it.
He's like, but what are you gonna do? He's like, well, I'm waiting for Bitcoin to go up.
Wait for my Bitcoin to go up.
So that's what it seems like we're at. Is you're either going all in on crypto and technology, and
And
you're
you
still
understand it.
and you understand it, and you're still kind of struggling, but you're just hoping, hey, we get a pandemic boom again.
Something's
Uh,
going to happen, right?
Something's gonna happen. But it is interesting. I think everything's just transitioning. Like one of my plans is, hey, if these full self-driving cars work, live in a bigger city, get some full self, get a FSD, because it does sound kind of futuristic and fantasy,
Right?
but that's how it always is, right?
It is, right? There's
So
somebody that always does something that nobody thinks is possible and is way out there, and the person that implements it ends up creating some sort of business that nobody thought could happen, and now here it is.
right.
But yeah,
So
full self driving cars in a huge metropolitan city, you've got a taxi system.
there you go. You got a taxi system, and driving sucks. I absolutely hate driving.
Mm-hmm. All
I
those
hate
Uber and Lyft
driving.
drivers, I do not feel sorry for. I mean, I feel sorry for,
Yeah.
because that's a
Yeah.
lot of work. That's just craziness.
And your back, you get the back problems, and then here comes the healthcare
Mm-hmm.
system. Yeah, so it looks like there's a lot of transitions happening, especially in the healthcare sector with the new drugs, Ozempic. Do you know anybody using Ozempic?
I don't, but I gotta love that stuff, right?
You do. I see guys at the gym all the time. They're just getting
Got the
skinnier.
Ozempic face.
They're getting skinnier and skinnier, and I'm like, "Dang, man, chill out on the Ozempic." Um, but I mean, I don't know. I guess it's better than obesity, right? I guess it's better than
Yeah, but it's
eh,
not fixing the problem, because obesity isn't the problem. It's the underlying problem that's causing the obesity. So I mean, you can fix being overweight, but if you're not fixing the underlying problem that caused you to be overweight, and Ozempic is just hiding it,
mhm.
you're not healthier, right?
No,
So I mean,
you're done. You're on it. You're on it forever.
that's the part that people don't realize, is that if you want to be healthier and you want to avoid the healthcare system, you have to change your lifestyle. You have to exercise, you have to eat right, you have to do things that keep you from having those problems and needing those drugs. Because if you start those drugs and that's what's keeping you from being overweight, then you're on it for the rest of your life. And the pharmaceutical industry just got themselves a client for life.
Right. Right. Yeah. So now they're subsidizing your health. They're giving you Band-Aid stitches, and they're giving you Ozempic on the other side. So it doesn't really help anything. So I don't know. It has to get to these kids in the schools. I think the school system is going to be key going forward. Like,
Oh, I agree.
we need to teach them better health. Therefore,
Mhm.
pharmaceutical companies are not pitching them crap. And number two, when are we going to put finance into
So,
schools?
did you hear there's a bill in California that they may be bringing financial education to schools?
Okay.
There's a
Okay.
financial education bill that is up on the floor in the state assembly for bringing financial literacy or some sort of financial education class to California schools.
Okay. Perfect.
I don't
Perfect.
know if
Yeah.
I trust them teaching my children about financial education, considering our federal government couldn't balance a budget if they had to.
Right. What are they
They gonna teach them
actually
to borrow
implement?
more money. I mean, that's the just
Yeah.
ask yourself, right? Who's teaching my children financial literacy or financial education? Somebody who has a spending problem and who borrows all of their money,
Hmm.
like that's where I question it. So I mean, again, it comes down to parenting, right? We need more morals and values and parents who instill those morals and values and education in their own children, because we can't rely on the schools to teach our children everything, because the schools don't know everything, and those people who are educating them in those schools could be educating them on things that are go counter to what you believe.
That's why I left the school system, because my coworkers, sorry if you're listening, but you guys had bad habits, and I was like, nah, dude, I'm gonna get pissed off and tell you off in front of a kid. No, I'm just kidding. No, but seriously, the school systems suck because they're not incentivized to improve the human being. They're incentivized to preach nothing.
Test.
Yeah, testing,
Yeah. Make
right?
sure they pass the test. Make sure they get a better score on the test, which means absolutely nothing, because it's not like anything has ever improved since the um, introduction of the Department of Education. No real data shows that our kids have gotten any smarter in our public school system since the Department of Education has taken over. There is no statistical data that shows that we've improved our numbers. So
Privatize school, right?
well,
Privatize.
I mean, it's a thought, right? We
Mhm.
talk about privatization and deregulation and regulation, right? So how do you do it? Where's the trade off? But I don't think our federal government should have its hand in the education of our children, because they've proven over the last 50 years that they can't do anything about it. They don't do anything right.
Josh, I got 3 solutions for kids for school. Cold plunges,
Cold plunges,
hot yoga,
hot yoga,
and pickleball.
pickleball.
Yeah, pickleball, man. What do you think about those? What do you think about
Oh
pickleball,
man,
man?
you had
Tell
to go
me.
to pickleball, bro. That is the worst sport on the planet.
You think so?
Man, you want to talk about uh, some stupid ass game that somebody created that really doesn't do much for anybody.
I'm warming up to it. I'm warming up to
Okay.
it.
Yeah, my
Well,
wife wants me to play it. She's a tennis player, so
she's a tennis player, yeah.
yeah.
I
I'll take
mean,
my soccer, bro.
you can't listen. It's easy to get started. It's you're not gonna fight the way you do in basketball. There's old people competing with young people. It's some type of exercise at all.
Mhm.
I like it. I mean, I'm not the biggest fan. My brothers play it, so I'm trying to warm up to it. I'm trying to, compete for the rest of my life. I can't sprint anymore. I can't jump anymore, unfortunately. So I got to do something. Um, I think you went out there, Josh. Let me see. Maybe the camera went out. But yeah, pickleball, man. Pickleball. You just got to get the right racket because some rackets suck.
Yeah. No, I mean that's again, it's another thing, right? It's a game that you play, and you got to have all these tools to be able to play it. And I mean, if you're going to play it and you're going to learn it, you might as well get the basic tools and just figure it out, get used to it. If it works, it works. If it doesn't, it doesn't.
I know there's a lot of industries trying to build off of that also. Pickleball. how can we build a software around pickleball to get? It's just a fast growing sport, so I don't know.
Yeah,
I was wondering about it. What about cold plunges? Have you done a cold plunge?
I do them every day.
The shit, what? Get out of here, Josh.
Mm-hmm. Mm-hmm.
No wonder you've been on top of your game. Okay.
I got my cold plunges. I got my Shilajit.
Is
I
that
got
that
my.
new is that that new
It's that.
supplement?
It's that black ooze from the Himalayan Shilajit. And it's just got a
Oh,
bunch of different vitamins and different minerals and stuff in it that you get with one scoop of it. So I do that every day.
okay.
And then methylfolate.
Okay. Methylfolate. Okay. Yeah, somebody told me about that. Shilajit. There's a dude who actually does cold plunge. I didn't know that people did that like that. Okay.
Yeah, and
So
I got my hydrogen water too.
get out of here. I was gonna get how is that? I was gonna get some.
I mean, honestly, it doesn't taste any different. Doesn't
Hmm.
There's no difference to it. It's just all it is you turn a battery on and the battery breaks up the hydrogen from the water, causing the bubbles. Drink it. It just means that the hydrogen's released into your body a little bit faster.
But do you feel a difference? Like,
Oh yeah.
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 Okay, I'm gonna have to get on that, man. I didn't think I'd be taking tips from you. Goodness. Okay.
Hey, I'm
Hydrogen
trying, dude.
water.
I'm 40. I'm 44 years old. I know I'm getting old, and I'm gonna have to start doing things to keep myself healthier. So I'm trying everything, and if it works, it works.
Hot yoga. Have you tried it?
I know.
It's hard.
I bet. I've heard.
It's hard.
I've heard the horror stories.
I thought it was gonna be I've done yoga. Okay, let's do it. And my heart was beating like I was in football practice. I was like,
Mm-hmm.
goodness sake. It's just hard to get in the positions. The positions are tough if you're not used to it. And you're
Yeah.
but you sweat so much.
Yeah.
Like I swear I dropped like 5 pounds of water during
Yeah.
it.
I mean, that's probably the best part about it is for the stretching, but it's the heat and the sweating that's actually helping your body, which you could effectively do with a sauna. So,
Dang
from
it,
what
I'm
I
gonna have to
understand,
get that.
a
I'm gonna have
sauna
to
is the
get that.
thing to do.
The sauna, yeah, I do the sauna all the time. A sauna, I definitely do the sauna. But so cold plunge, Sheila G. It looks like Biggs is on here. He said that he
Yeah.
uses it too. Okay.
Yep. Hydrogen
Sheila G.
water,
Hydrogen water. I got to get on the hydrogen water.
and either do hot yoga or sauna.
And you need to and go out there and do some pickleball. Let me know what you think.
All right, I'll tell the wife we got to go do some pickleball, bro.
I'm gonna try to get into it. Yeah. Well, any other topics, Josh? You want to go over the housing market? What is the last thing for housing? What should you or what can people expect in the housing market? I know we talked about it, but before we close out, you're the expert here. What do the
Expect rates to come down over the next year. Um, expect more homes to come on the market. I wouldn't expect prices to fall drastically. Um, but if you're thinking about buying a house, figure out what your budget is. So know what you're willing to pay, and then figure out where that's going to leave you as far as your purchase price is concerned, and be patient. Because that's what I'm telling everybody that I'm pre-approving right now. Don't rush into this. Don't just buy the first thing that is within your budget. Make sure it meets all your needs and you're not overextending yourself. Because at the end of the day, when you buy a house, it's a huge commitment because you're responsible for fixing everything. You're going to have unexpected bills. Shit, I got to meet a guy for my garage door today because my wife's garage door stopped working. So, I mean, there's things that you just got to be prepared for. So if you're going into it, set yourself a decent budget so you're not overextending yourself, and just expect rates are going to be coming down, and there'll be more homes on the market.
Okay, one more personal question. You guys heard that. So I saw that one of my, I don't want to say it, somebody I know, they sold their crypto. They went to go purchase a house, and the bank told them we can't use your cash because it came from crypto. We have to wait 2 months. What's that about?
So they want to season it. See, they talked to the wrong bank. So
Okay.
anytime you're dealing with funds to purchase a house, they have to be able to verify the source of it. So if you can show that you sold crypto and withdrew that money and deposited it into the bank account, that's your money for your down payment. That's fine. It doesn't need to wait 2 months because you can verify that the money was in the crypto.
Okay.
But if you withdrew the crypto and you kept it cash, you would have to show that you kept it cash and deposit that same amount into a bank account and then use it for the funds to close. So cash is an unacceptable source of funds, but as long as you can source where the funds came from and that they were there previously and that's the money you're using and you're not laundering money from some terrorist group or cartel, then it doesn't matter.
All right, all you gangsters out there, you're not gonna be able to do that. So
Nah, if you're a gangster cartel, go deposit your money in the bank, leave it there for 2 months, and then you can do it.
okay, 2 months. All right, Josh, I appreciate it. We'll do this again. Appreciate it. All right, guys.
Definitely, brother. Talk to you soon, man.
Catch you next time, guys, on Macro Show. We'll be back to go over the market. We're gonna start this next week. We got the content coming out still. Course, macro course, how the macro system works, financial system, investing, all that stuff. For some of you guys that are on here for the stock market or crypto, if you got some questions, throw them out there. I'm gonna go to the restroom real quick. And if you want to know, if you want to know, okay, what's going on in the crypto market, what's going on in the stock market, we'll go over that real quick. Throw your questions in the comment, and we'll go over that. I'm gonna go to the bathroom real quick. If you have none, we'll exit out. But I'm gonna wait to see if we have any questions on the stock market, where we're headed, what does it look like, what is the environment. All right, Biggs. Overall thoughts on crypto right now. I think it's just a correction. I've been overall bullish in terms of credit cycle, potential rate cuts that are being said. It does feel a bit frothy. Okay. Yeah, I think it's just you got to be patient here with crypto. We definitely got to be patient. So if we look at let's look at a couple charts. We haven't done charts for a while. All right. Full screen. There we go. Let's go to Bitcoin. Now, I think the biggest factor right now that came into play that was not in play is oops, wrong chart. The biggest factor in play right now is that you're starting to get support from the White House, right? Not directly from Joe Biden, but Trump is now pro crypto. Now, that's not going to cause crypto to jump right away because we're still in this phase. We're still in this consolidation phase. But if we look at the chart, we're still in the banana zone. We're still consolidating. And on average, it takes a couple months. It takes after the halvening. Halvening was in April. Okay. So last cycle, if we go back after the halvening, let's turn on the halvening real quick so we can see Bitcoin halvening events. There we go. So far, April, May, June, we're 2 months. We're about 2 months in following the halvening. Okay. On the last cycle, I mean, look at this boom. When it comes, it comes. The last time we had the halvening, it was May, June, July, August, September, October. And it was about October where we took off. So it took 6 months. It took about 6 months before we went parabolic. So maybe I think July, we still have a move because of the way the price action looks. I think we still have a move in July. Okay. The last cycle, it also took a while. It started to move. It did start to move. This was 2 cycles ago. Okay. We were July, August, September, October, November. So I'm thinking it might take longer than a lot of people expect. You never know though. Now with the political system, with rate cuts, if we do get a rate cut sooner than expected, I think we're going much higher quicker. Okay. If we do get a commercial real estate collapse where the Fed has to inject more liquidity, and let's look at that liquidity chart. We haven't seen this for a while. I haven't even looked at it. Let's take a step back. Okay, this is Bitcoin versus liquidity, right? This is Fed liquidity. It's still sideways. We're still moving sideways. any type of weakness, any type of commercial bank weakness, liquidity will go higher. They are they going to cut rates? Maybe, maybe not. Like we talked about it with Josh, maybe they increase liquidity before they do that. Global liquidity, this is definitely going to be going higher. I don't know what it looks like today, but this should be going higher because now Europe is cutting rates. The Bank of Canada, we're getting the global rate cutting cycle accelerate. Now, macro takes a while sometimes. Sometimes it takes a while, and then all of a sudden, boom, it comes all at once. So I would say stay patient. There's a lot of good things. We're looking at the Ethereum ETF coming online also. That's going to move altcoins. As soon as Ethereum passes ETF, now big institutions can now buy Ethereum. Okay, now you have a Bitcoin. Now you have a Bitcoin rail, a rail for institutions to get into Bitcoin. Next is going to be Ethereum. Is there going to be a next ETF? I'm not sure. Maybe next year. Either way, liquidity is on the rise. Rate cuts are coming. A slower economy means lower interest rates. Lower interest rates mean more risk assets go higher. Okay. And that's all we're waiting on. It's just, it's kind of, we're sideways, we're moving sideways. But at the end of the day, we're still in the banana zone. We're still in the banana zone. And a lot of the projects are getting better, right? Chainlink is partnering with a lot of major institutions, and they're working to get CCIP, which is the main protocol, online onto the blockchain or onto these institutions' private blockchains. And in the meanwhile, we're just consolidating. So we'll see what happens. The market's up. See what Ethereum looks like. Ethereum is consolidating. When we do make this move, I think we go to 5,000 for ETH, maybe October, maybe July, maybe August. I think we go up there. But as we get closer to the election, I think we just go higher because Trump should be leading in the polls. And I think the way the market looks at it a lot of times is if Trump is pro crypto, the more progress we see that Trump is leading in the polls, the more crypto is going to want to move up because it's going to expect friendlier, a lot more friendlier regulation on top of the Ethereum ETF. Okay. And on top of expectations of more rate cuts. Now, technically, Bitcoin's already pulled back. So we're not overbought. If anything, we're becoming underbought. If we go to the weekly, it doesn't look great. It looks like we have some time to consolidate. This could take all the way to October, but it gives you time to accumulate. It gives you time to accumulate. When it moves, I'm telling you, when it moves, it's going to move. Do we know when? No. We're looking at the macro for that. But when it does break out, it's going to be nasty. Just like it always is, it's going to be nasty when it breaks out. So I'm just staying patient here. I'm staying as patient as possible. I'm trading spreads. If you go to the website, I have a couple posts. I'm going to make some videos on how to trade credit spreads. You're just generating some income using credit spreads. You're just going to have to learn, experiment. But until then, this is the biggest trade. I still think this is the biggest trade so far. When it moves, it moves. And I'm expecting Bitcoin to go to 100K by the end of the year. This is Ethereum. Let's go Bitcoin 64K. And that's an easy move. From here, that's what? That's a 50% move. That's not really a big move for Bitcoin. It's a nice move, but it's not tremendously, that's not your biggest move. It could go to 150 early next year. Could go to 200. We don't know. We're just going to stay as patient as possible and wait for the business cycle to play its way out. Okay. What else we got here? Bigs, especially with all the celebrity coins. Tate, Izzy. Oh, okay. Lil Baby feels like everybody and their mom's launching a coin now. Top Signal. No, I don't think so. I think it's just getting started. I think we're still in the early cycle. Like if we go back here, right? We're at this point. We're only a couple months following the halvening. So where it's like a spring, we're getting ready to launch higher. We're just getting ready to launch higher. The RSI does look like it's going to dip. It looks like the Bitcoin might come down to maybe test 60,000 again. Okay. And we're just consolidating between 60 and 70,000 for another month, another 2 months. Now, I've been saying, hey, we should have a summertime rally. Hasn't happened yet. It just hasn't happened yet. One of those factors is going to be interest rates, right? Bond yields. And the weaker the economy gets, the closer we get to lower bond yields. Now, I think the real thing holding crypto back right now is the US dollar. Okay. The US dollar is pretty bullish at the moment. And the dollar and crypto are inversely correlated. So once we do get the dollar, let me take this off. Once we do get the dollar start to roll over and come back here, it does create a tailwind for crypto. But right now the dollar is strong, meaning people are not just people, but investors are selling for dollars, right? Maybe they're selling a lot of their tech trade for dollars. Maybe the dollar saying, look, the US economy is so strong and interest rates are so high, it's better to just be in a safe asset like the US dollar currency. But it's the closer we get to QE, the closer we get to rate cuts, the sooner we see the dollar start to roll over. So I think it's the dollar as the tailwind, as the headwind at the moment. It did drop and it's starting to curl back up. We do have resistance at about 106 to 106.50. I don't know how long that's going to take, but I would definitely be looking at the dollar here to see what happens next. Now, a couple other trades I'm looking at here. Internals, no, in play. Deere Company should benefit from stimulus, from more infrastructure. This is basically an infrastructure play, right? A play on more infrastructure from the government, more spending on roads, buildings, whatever it is, construction. So this is this is my favorite play on construction. Our second favorite, I'm sorry, Deere Company's second favorite. Number one is going to be Caterpillar. Caterpillar has a really sharp, it's still in the uptrend. We can see it's still uptrending, higher low, higher low. And now we're making that third higher low from the previous low in 2022. And does it touch the trend? I'm not sure. I'm not sure if it touches the trend, but it's forming a bull flag. This is a bull flag. What is the expected return or the expected price I'm looking at? I think we retest 360 for sure, and then we can go as high as 420. So I'm looking for that with the Caterpillar. Might do a call debit spread, who knows? Robinhood is finally pulling back. I think it has a little more room to pull back. It's it has the bull narrative of, increasing trading volumes with AMZ, or I'm sorry, GME, GameStop, AMC. Trading volumes are increasing, but this is a crypto play. This is another proxy crypto play. It goes higher with crypto. Amazon looks really good. Amazon testing all-time highs for a third time. Actually, this is the fourth time because the all-time high is back here. So I'm looking also for Amazon. This looks really good. It's been consolidating forever. Above 190. Amazon above 190. One of the biggest AI players in the game. Amazon AWS is now yielding about 100 billion in revenue. So I'm looking for Amazon. I think it breaks out even before earnings in late July. Amazon looks good. Palantir, we saw Palantir after it had that triple bottom, 1, 2, 3. It took off. It went from 21 to 26, starting to pull back here. So I like this trend. This is good. You want to see a sharp pullback in an uptrend. So now we have the second uptrend, right? We got a second uptrend now. The last trend was over here, or not second uptrend. I'm sorry. We have a second touch on this trend. This was where our trend began. We came down at 22. Now we're back down at 23. So I still like Palantir. I think it's a big AI play into the future. My guess is Palantir is headed for 30 over the next bull run. When is the next bull run? Well, you could argue that NASDAQ took off already, and the S&P kind of is already touching all-time highs. When is Palantir going to take off? It has its own narrative. So I'm still looking at Palantir. I think it's a good risk reward. It's not overextended like NVIDIA. Where's NVIDIA? I might have took NVIDIA off of here because it's just so overextended. Okay, and NVIDIA is pulling back. NVIDIA is finally pulling back. So we'll see what happens. Anyways, I like AMD. I still like AMD. Another good risk reward. It's holding that 150 level. I think NVIDIA runs to 195. And then if it does have another monster rally like it did back here, it went here from the lows. This was back in October. From the October lows, it ran. I mean, this thing pretty much doubled from 95 to 228. Okay, went up 100%. So I thought it would work out a little sooner, and it's taking a little more time. Sometimes these things take time, but I like AMD as a better play for chips or for semiconductors. I like this as the semiconductor play for sure. AMD, Palantir, Amazon. I think Amazon's what I added. Amazon and Caterpillar are the two that I added. Ulta Beauty, I mean, it's at support here. This is more of like an options trade, but I don't know if I'm going to actually trade this. It's got to definitely hold 375. Tesla, just be patient. Tesla's looking really good, strong. It's consolidating. It's taking some time also, but Tesla, when it breaks, it breaks. And we still have some room to retest 225 before we pull back when it does break out. So we still have some room to break out for Tesla. But Tesla's holding the 175 level for a while, ever since April. I think the downside is in. You can see sort of a reverse head and shoulders. Okay, there's your shoulder, there's your head, here's your shoulder. And we need to get above and hold 190. We need to get above. We had one day where it did hold, and then it just broke down. It was back here. We did get above VWAP here. We gapped up, and then we sold off on the, I think it was Elon got his pay package, right? Or the news that he would get his pay package. So again, yeah, it's a little, I want to say it's frothy. It's just there's a lot of uncertainty here. So the market's looking for rate cuts, and I don't think we're going into recession as far as the stock market is concerned. Too much spending on CapEx. Those are the plays I'm looking at. So again, going back one more time, we got Caterpillar, infrastructure play, forming a bull flag. You got Robinhood, needs a little more room to pull back, I think. You got Amazon pressing all-time highs, right? Higher lows. I mean, you're at 175 at the low, so Amazon looks really good. Over 190 for Amazon, and it's trying to get there. I think it's going to break out soon. It's trying to get there. Palantir, this is good for Palantir. Very constructive. It might move sideways for a little bit. Try to hold this, 23 level. And then you got AMD. Those are my favorite plays other than crypto. Obviously, Bitcoin, Ethereum, Chainlink. Chainlink giving you more time to accumulate down here. And it's holding anchored VWAP. Still holding the anchored VWAP, the volume weighted average from the June 2023 low. That was the low for the cycle. And so far, we're holding that anchor VWAP from the low of the cycle. Looks like we're going to retest it for a second or third time. We'll see. But I think I like what I'm seeing here. I definitely like what I'm seeing here. But yeah, I don't think it's a frothy market in crypto. I just think it takes a lot more time than people expect. And then when it moves. Like this last time in Ethereum, when it finally started to go, I mean, it moved up like 50%. So just be patient. Just be patient. The only downside, the only bad thing I see here is, or the only thing I feel uncomfortable, I don't like, is oil moving so fast from 72 to 82. But again, we're in the summertime. This is peak energy prices. A lot of people are taking record flights right now. We're seeing a lot of flights. So as long as oil stays in this zone, I think, by July, oil can't go much higher if we're already through the hottest period of the season, right? And then that supply should come down. I mean, not the supply, the demand should come down, and we should see oil, stay as tame as possible where it's at right now. Here's where I'm bullish on the market. This isn't pushing crypto yet, but rates, we said we should see rates come down to 4.2, and they came down to 4. Yeah, they did. They came down to 4.2. They're starting to break down now. Interest rates, the cost of capital coming down is very bullish for risk assets and tech. And we just got to say, okay, is it going lower? Now, this should have actually pushed the dollar lower, but it did not. Instead, the dollar went higher. They're diverging now. They're having a divergence What does that mean? It just means the US economy is, or this move in the dollar might be representing weakness in the US economy. You know, the weaker the economy, the more people pile into bonds. So we're seeing TLT go up and we're seeing the dollar go up. But you're also getting tech up. So it's kind of confusing. Right? So we'll see the next economic data. The significant stuff doesn't come out for a couple weeks. Next week, not much to look at. It's just regular price action. Small caps slumped right back to where they were. And then how many stocks are moving above the 50-day moving average? That's an important one. Let's see the internals. Okay. So we're trying to this is how many stocks are moving above the 50-day moving average. It's an indicator of market broadness. Is the market broadening? Once we get above 50, we start to push up. The market will expand. The market's literally expanding as it goes up. And that expansion should kick off another rally. And I think we're heading into the summertime rally. I mean, we've already we rallied a lot in the summer. Not every single stock is rallying, but the S&P definitely rallied a lot. Summer, June started here, and we talked about this. This is when the Fed starts to reduce the balance sheet or taper the balance sheet. So May, June's right here. So we're already up in June. Summertime rally, we're up 5% on the S&P. That's pretty solid. Pretty solid. Maybe we consolidate a little bit. We got the anchored VWAP holding from that last pullback, and then the previous pullback, we still have room there. I think the lowest we can go is 537, retest this previous resistance. And I think that's as low as we go. I'm selling a lot of puts. Selling a lot of puts on a daily basis because I like this pullback. I think we're going higher. It's been a pretty strong melt up, and I don't expect things to change, but I'm definitely waiting on AMD to blow up. Amazon, Tesla, we'll see. Tesla might have to wait till earnings, or the next delivery report for Tesla is probably going to be the next catalyst. And then, Robinhood needs a little time to come back. Ethereum, Bitcoin, we're just staying patient there. Anyways, yeah, that's all we got today. I think, the most important thing for crypto, Trump is now pro-crypto. He is now pro-crypto, pro-regulation. The market's going to like that a lot. We're just waiting for rate cuts or yields to come down or for the dollar to roll over. All right. So stay as patient as possible. I'll continue to pump out content, and check out the newsletter if you haven't. Check out the newsletter. We have been bullish this whole time, and I expect this rally to continue into the summer, maybe kick off a little more in July, make new highs, and carry this market higher. All right. Well, that's all I got for you guys. You guys stay blessed, eat healthy, lift weights, and improve every single day. Thank you very much. Stay blessed.